You miss one credit card payment, then another, and suddenly your phone won't stop ringing, your credit score is crashing, and debt collectors know your name better than your friends do. But that's just the beginning. What really happens if you never pay? From hidden interest traps to lawsuits and wage garnishment, this isn't just about money. It's about losing control of your financial life. Let's break it down. You might think missing a credit card payment by a day or two isn't a big deal. After all, nothing explodes, no alarms go off, and your credit card still works. But in reality, the moment your due date passes without at least the minimum payment, a hidden countdown begins. Your account is now officially past due. In the first few days, the credit card company adds a late fee, usually between $25 and $40, directly to your balance. This means you now owe more than you did before, and that fee itself will begin to accumulate interest. If you were already carrying a balance, the missed payment triggers daily compounding interest, typically based on an APR of 18 to 29%. Even though it might sound small on paper, that interest adds up fast, especially when it's being calculated not just on your purchases, but also on the late fee itself. As days pass, your minimum payment for the next month increases, making it even harder to catch up. Around day 10 to 15, you'll start receiving emails, reminders, maybe even a polite phone call from the card issuer. The tone is still friendly, but the message is clear. Pay up. If you normally paid in full each month, you likely had a grace period where no interest was charged on new purchases. But once you miss a payment, that grace period may be revoked. That means any new spending on the card now starts gathering interest from day 1. By day 20 or so, your account is flagged internally. You may lose access to perks, promotional offers, or even see your credit limit quietly reduced. And then comes the most dangerous milestone, day 30. Once your payment is 30 days late, the credit card company will likely report it to the 3 major credit bureaus, Experian, Equifax, and TransUnion. This single report can cause your credit score to drop anywhere from 50 to 100 points, or even more if you previously had a strong score. And here's the worst part. Even if you pay the very next day, that late mark stays on your credit report for up to 7 years. Your credit score isn't just a number, it's your financial passport. It determines whether you can rent an apartment, finance a car, get a loan, or even secure certain jobs. Missing one payment can end up costing you thousands of dollars over time in higher interest rates, denied applications, or lost opportunities. And it's not just the numbers. The mental and emotional stress begins to build too. You might start avoiding calls, feeling anxious about your finances, and dreading the next billing cycle. The good news? If you act within the first 30 days, there's still a chance to contain the damage. Pay whatever you can, even a partial payment helps. Call your credit card company, explain the situation, and they may waive the late fee if it's your first time. Stop using the card until you're caught up, and set up reminders or auto pay so it doesn't happen again. In short, the first 30 days after a missed credit card payment are deceptively quiet, but incredibly dangerous. What feels like a small delay can lead to long-term financial consequences. Don't ignore that first missed payment. It's not just about avoiding fees, it's about protecting your future. Missing a credit card payment may feel like a small mistake, but its impact on your credit score can be massive and often misunderstood. The credit score, that mysterious 3-digit number, controls more of your life than you may realize. It doesn't just decide whether you get a credit card or not, but affects your ability to rent a home, get a car loan, qualify for a mortgage, even your job in some industries. And when you miss a payment, the effect on that number can be surprisingly brutal. Here's what really happens. Your credit card issuer gives you a grace period of 30 days before they report the missed payment to the credit bureaus. That means if you make the payment within that time, the damage can still be avoided, although you may still face late fees and interest. But if 30 days pass and no payment is made, the bank hits the trigger. They report your account as 30 days past due to the 3 major credit bureaus, Experian, Equifax, and TransUnion. That report becomes a negative mark on your credit history. It doesn't just sit quietly, it loudly announces to the financial system that you failed to meet a credit obligation. The result? Your credit score drops, often between 50 and 100 points, depending on your previous score. If your score was already average or low, the damage may be smaller. But if your score was high, say Above 750, the impact can be devastating. Credit scoring systems like FICO and VantageScore weigh payment history heavily, often making up 35% of your total score. And within payment history, a single 30-day late payment is seen as a serious red flag. Why? Because lenders don't care whether you were late due to a family emergency, lost job, or simple forgetfulness. The algorithm only sees a broken promise. You agreed to repay, and you didn't. That makes you riskier in the eyes of future lenders. But it doesn't stop at 30 days. If the payment remains unpaid, it's marked as 60 days late, then 90, then 120. Each of these stages causes further drops to your score. Eventually, after around 180 days of non-payment, the account may be charged off by the lender. This means they consider the debt uncollectible and write it off as a loss, and may sell it to a debt collector. A charge-off is one of the most damaging things you can have on your credit report. It tells future lenders, not only did this person not pay, they never even made arrangements to fix it. And even if you later pay the balance in full, the history of being late remains on your report for 7 years, from the original delinquency date. Some people think, if I pay it now, the score will go back up immediately. Unfortunately, it doesn't work that way. Paying helps. It stops further damage and shows. Lenders, you're trying, but the late payment stays in your report and continues to weigh down your score. And it doesn't stop with just credit cards. If your credit score drops significantly, that affects your ability to borrow in other areas. Applying for a car loan? You might get rejected, or worse, approved with a much higher interest rate, costing you thousands over time. Renting an apartment? Some landlords check credit scores, and a recent late payment can mean your application is denied. Trying to get a mortgage? A drop in score could take you out of eligibility for the best loan programs. Even cell phone companies and insurance providers use credit scores to determine your rates. A lower score can literally make your monthly bills more expensive. And the real kicker? Employers in finance, government, and security industries sometimes check credit history when making hiring decisions. They won't see your score, but they'll see the missed payments. That small oversight you made last month could quietly close the door on a future job offer. It's a domino effect, and most people don't see it coming until it's too late. And here's another thing that most people don't know: the newer the late payment is, the more it hurts your score. Over time, the negative impact fades slowly, but never completely disappears until the full 7 years pass. For example, a 30-day late payment that just happened last month might drop your score 90 points. But that same mark from 5 years ago might only be pulling your score down by 10 or 15 points. Time heals, but very slowly. So how do you protect your score? First, always make the minimum payment, even if you can't afford the full balance. Just making the minimum keeps your account in good standing. Second, set up automatic payments so you never forget. Even a missed due date by a single day can spiral into a big problem if ignored. Third, check your credit report regularly. Sometimes errors happen, and late payments may be reported by mistake. You have the right. When you miss a credit card payment and it goes unpaid beyond 60 days, you enter a stage that's far more serious and far more stressful than late fees or a dip in your credit score. This is when debt collection begins. At this point, your account has been marked as severely delinquent by the credit card company, and internal efforts to recover the payment usually stop. The account is often transferred to the bank's in-house collections department or sold to an outside collection agency. This shift changes everything. The tone of communication becomes firmer, and now you may receive repeated calls, emails, and even letters demanding payment. These calls may happen multiple times a day, every day, and even during weekends. The collectors are trained to sound intimidating, urgent, and persuasive, and legally they're allowed to contact you within specific limits. But make no mistake, they will make your unpaid bill feel like an emergency. Most people at this stage begin to experience serious mental and emotional stress. It's no longer just about money. It's about being pursued. You may feel anxious every time your phone rings. You may start avoiding unknown numbers. The fear of being judged, embarrassed, or harassed over the phone can lead to depression, shame, and isolation, especially when collectors are aggressive, and they can be persistent. Under the Fair Debt Collection Practices Act, FDCPA, in the U.S., collectors must follow certain rules. They can't call before 8 a.m. or after 9 p.m. They can't threaten violence, and they can't lie. But they are allowed to pressure you, and they do. Meanwhile, your credit report is worsening. Each passing month of non-payment is being recorded. By 90 or 120 days late, the credit card issuer may label your account as in default. Around this time, they often charge off your debt, meaning they write it off as a loss and stop trying to collect it themselves. But this doesn't mean you're off the hook. It usually means they've sold your debt to a third-party debt collection agency, sometimes for pennies on the dollar, and now that agency owns the right to pursue the full balance from you. So even though the original lender gave up, the collector is now legally entitled to chase the full amount. And unlike banks, collection agencies are aggressive. They often use auto dialers, scripted calls, and repeated contact to pressure you into paying. You might also receive letters that sound threatening, using bold red text or large font warnings like final notice or settlement offer. They may even contact people around you, your spouse, your workplace, or your family members, not to discuss the debt, but to confirm your whereabouts. This adds social stress to the mix. Some people start feeling like criminals, even though debt is not a crime. But this stage can also bring confusion. You might not recognize the new agency name or wonder whether the debt is even legitimate. Sometimes multiple agencies end up chasing the same debt, especially if it's been sold more than once. That's why it's important to always ask for validation, a written notice that confirms the amount, the original lender, and your rights. Legally, they must send it within 5 days of first contact. But here's the biggest risk of all: legal action. Some debt collectors may escalate their efforts and sue you in court. If you ignore the lawsuit or fail to appear, the court may issue a default judgment against you. This gives the collector power to garnish your wages, freeze your bank account, or place a lien on your property, depending on the laws of your state or country. All this can happen without your direct involvement if you don't respond. And yes, all of it starts with one unpaid credit card bill. Meanwhile, the damage to your credit report continues to grow. An account in collections can stay on your report for 7 years from the date of delinquency, dragging down your score and affecting every future credit decision. Insurance companies, landlords, even employers may see that collection account and judge you as financially irresponsible. And once it's in collections, paying the full amount won't erase the mark, though it will update the status to paid collection, which is slightly better than unpaid. So what can you do? First, don't panic. You have rights. Collectors cannot threaten, lie, or harass you. You can request communication by mail only, or ask them not to call your workplace. Second, verify the debt before paying. Make sure it's accurate and still valid. Some debts are so old they're considered time-barred, meaning they can no longer be sued over. Third, if you want to resolve it, try negotiating a settlement. Many collectors accept 30–60% of the full amount in a lump sum or short-term payment plan. Just make sure to get the agreement in writing before sending any money. And fourth, consider working with a credit counselor or attorney if the situation becomes overwhelming. Ignoring collectors doesn't make them disappear, but understanding the system gives you the power to respond with strategy instead of fear. The collection phase is one of the most difficult parts of debt, not just financially but emotionally. But even now, you can take back control. You can rebuild. You can protect your future. Because the truth is, the system wants you to give up. But you don't have to. If your credit card debt goes unpaid for several months, usually beyond 180 days, the situation shifts from financial stress to legal risk. At this point, your account is typically charged off by the original lender and handed over to a debt collector. But if the debt remains unpaid, the collector may take the next big step, suing you in civil court. Many people ignore the collection calls, thinking they'll go away. But a lawsuit is much harder to avoid. You might receive a court summons at your home, and if you fail to respond or appear in court, the judge can issue a default judgment against you. That's not just a legal mark. It gives the creditor power. With a judgment, they can request to garnish your wages, meaning a portion of your paycheck goes straight to them before it even hits your bank. They may also freeze your bank account, making it impossible to access your own money. In some states or countries, they can even put a lien on your property, which prevents you from selling or refinancing your home. This isn't about going to jail. Debt is a civil matter, not criminal. But the legal consequences can deeply disrupt your financial life, and they stay on your public record for years. But here's what many people don't realize. You still have rights. You can respond to the lawsuit, challenge it, or settle out of court. Ignoring it is the worst option. Legal action is the final stage of debt, and by then, the damage is severe. But with the right help and the right timing, even legal problems can be managed before they turn into long-term nightmares. When a credit card bill goes unpaid for more than a year, the consequences stretch far beyond collection calls and court notices. They start to reshape your entire financial future. By this point, the account has likely been charged off, sold to multiple collection agencies, and possibly hit with a court judgment. But the damage doesn't end there. That missed payment from a year ago, it's still sitting on your credit report, pulling down your score month after month, and it will stay there for up to 7 years. This long-term stain makes it incredibly hard to qualify for new credit. If you apply for a car loan or mortgage, you'll likely face high interest rates or be denied altogether. Even rental applications, cell phone contracts, or insurance premiums can be affected, all because of that one unpaid credit card. Some employers, especially in finance or government, may also check your credit history before hiring. Financial instability can raise red flags, costing you job opportunities you never even knew you missed. Emotionally, the weight lingers too, the stress of living with bad credit can feel like a shadow following you everywhere. Even when you're finally ready to fix it, rebuilding credit takes years of consistent effort. Secured credit cards, credit builder loans, and responsible financial habits can help, but progress is slow. That's the real cost of long-term non-payment. It's not just the money. It's the lost time, the lost opportunities, and the quiet no behind every rejected application. The system doesn't forget easily, but if you start today, you can begin to take control again. Because while credit damage lasts for years, it doesn't have to define the rest of your life. So now you know, missing just one credit card payment isn't a small mistake. It can lead to late fees, credit score drops, debt collection, lawsuits, and even long-term financial damage that lingers for years. But knowledge is power. The more you understand how the system works, the better prepared you are to protect yourself and your future. If you found this video helpful and want to learn more about how money, credit, and debt really work without the boring lectures, make sure to subscribe to the channel. We break down financial topics in simple, clear ways that actually make sense. Hit the bell icon so you never miss an episode. Your financial freedom starts with understanding, and that journey begins right here.